Sonali, like Mark, we also have a 2030 announcement that we made a few months ago at Rock Creek to go net zero. I think what you put your finger on earlier is really important, because it's one thing to committing and working with other asset owners to commit. The harder part is how do you actually move from commitment to action? And I know we'll be talking about that during the rest of this session, but I think that is the part that needs the largest amount of work as we speak. And that starts with all of us as individuals. How much waste we're creating, what sources of energy are we using? We obviously don't have complete freedom to maybe go to net zero tomorrow, but how fast are we moving as individuals in our offices, physical infrastructure? And then also, obviously, in the greater good and in terms of public goods, how we're influencing the other asset owners. I think it's one way to go.
I think I'm very glad you brought that up, because now we've laid out the commitment. But to your point, commitment to action. What are some of the biggest challenges that you're finding, Afsaneh, about you and your peers that keep reality from coming soon enough?
Sonali, I think COVID put us back. I mean, look at how we were working so hard, all of us, to work on plastic removal, right? Reducing plastic use. And just look in the last 18 months, how much plastic use has increased, how much waste use has increased. At the same time as all the places where we were supposed to dispose of waste are now saying, do not bring your waste to my country or my region or my backyard on the one hand. But again, that's why I think this should start from bottom up and top down. Our youth are saying we want to live in a healthier world. And so, they don't want the temperature to keep on going up, whereas the older generation is still trying to sort of even talk about, Sonali, whether some of these climate actions that we're going to talk about are going to result in a higher inflationary environment. So I think we need to come and say, okay, these are the 3 specific investments that I will make in my firm. These are the 3 investments that I will work with my clients on. And I think, as Mark said, insurance companies, for survival reasons, have been at the forefront of this. How can we learn from them?
It's a great point, too, because there's some 40 trillion in insurance assets worldwide. Mark, what is the biggest challenge you see them facing as they continue this transition? And do you agree with Afsaneh that COVID has set us back?
Well, I think the biggest challenge is you can't divest to create a net zero portfolio. You would have to sell everything. And we want to generate the best returns that we can for our customers over a very long period of time. So we actually have to break it down into the different asset classes, and the approach is different depending on what they are. So in liquid markets, corporate bonds, equities, it's all about corporate engagement, because we need all the corporates we invest into to sign up to net zero. And that's not easy for them, but we have to force it through. So for the top 30 global carbon emitters, we've written to them and we've said, if you don't sign up to net zero targets and with a plan that we can measure against, then we're going to divest from you 2 to 3 years' time. So we actually have to have teeth as investors to invest. So huge problems in actually getting our portfolio to net zero. It's not going to be quick. We have to support the transition.
Asoka, one interesting thing Mark had just mentioned is you can't divest. It would impact so many different investments that are related to so many insurance companies and, frankly, other investors as well. Maybe you can describe the challenge there, because it's not just that we're talking about the green investments we make when it comes to energy companies. This whole situation is quite interrelated when you look across industries, isn't it?
Yeah, you are right, Sonali, and I think David is also right what he said. I can only refer now the part of the financial industry, asset managers. it is, of course, the private sector have to move when it comes to achieving net zero. Otherwise, we will not achieve it. Also, all the players in the financial industry will not make it. And asset managers itself is a part of this society, and they have to play a key role, in my opinion. And saying that, in my opinion, asset managers have different tool kits. We have a bulk of liquid assets, and as David alluded to, bonds, equity, and all kind of also in other areas, real investments. But saying that, we have to play. We can divest, but we have to formulate now. And as a signatory member of Net Zero, we are committing now, by the way, October, and then a clear plan over the next 2 years to work out, with the, one of the methodologies, what we can use, a science-based approach to say how to come to a medium-term target 2030 and then go into the 2050, how you want to reach it. That means, end of the day, in my opinion, you can divest, but I think that is something you have to use at the very end. The engagement is the one of the most powerful instruments what asset managers can do. I think recent industrialization means shift from the global economy away from a linear model dominated by carbon-intensive activities that have dominated since 19th century industrial revolution to more circular economic model, but also to take all the cost of production model, waste, pollution, everything. So this is a long way of next 20, 30 years. We have to change. That is what I'm saying. This is the industrial revolution called green industrialization. So that's a part of all, we have to play, everyone have to play a part. Insurance, asset managers, all banks, and so on.
It may be worth now discussing then, and each of you have already hinted at this, that there is a very specific role that the asset management industry has to play. The words that have come up a couple times now is engagement. Afsaneh, I'm wondering if you'll maybe discuss the difference between engagement and activism. Do you think that engagement needs to be happening at a greater scale? And what does that scale look like?
I think, as Soga mentioned, I think it's really important to have that engagement and to start creating maybe some standards so that we can measure. And particularly on climate, unlike the other SDGs, at least there is one measure that is relatively straightforward, which is carbon, right? So you can, in a more straightforward way, measure how much by whatever you're doing, if you're increasing or reducing carbon. And so that, I would say, it would be very important. Insurance companies have really jumped fast to do that because, again, for survival, they need to do that. But really the other pools of asset owners, the 9 largest pension funds account for almost $9 trillion, which is the same, by the way, as all the money that got into this COVID 9 trillion budget increases by various governments, right? So it's a huge pool. Imagine if that pool also starting count some sort of a shadow price for carbon. That would be huge, because then whether you're thinking about engaging through your direct investments or measuring, it would be a really good thing. The only other thing I was going to mention, Sonali, is that we all saw how Engine One, which is a tiny little asset manager, could have so much impact. Obviously, behind them, there were 2 or 3 large asset managers who had teeth and large assets. But just by bringing it to the fore, they impacted one very large company. Imagine if we take the same approach with Mark's 30 companies and have other Engine One lookalikes doing similar things. So you can do the engagement, you have to do the activism, and then we have to do our investment.
It's a great point for Mark to dive into now. Do you see more of your companies engaging on such a large scale as we saw this year?
Totally. The good news is that on the client side, sort of all our clients are talking to us about how to create a net zero portfolio. But on our investment side, again, all the corporates that we invest into are entertaining really active dialogue with us. And the 30 that I mentioned, we've had great discussion with all of them. And it probably does divide into sort of three camps. There's the ones who are actually the trailblazers. They're changing their company already. And actually, it won't be long before we can take them off our 30 list because they will have signed up properly to net zero targets. There's probably about a third of them who are working it through, and there's probably a third of them who really aren't being that thoughtful in our view. So that's probably how the engagement's panning out.
Asoka, you brought up this idea of engagement as well, and I'm wondering, do you see your funds taking a more active approach by means of engine number one, or even more passive approaches? You know, you see engine number one actually bringing ESG activism to index funds. So how do you see that engagement working throughout your own funds?
Look, I think we done the first engagement with the company in 1994. I've not been at DWS at the time, but saying that, and the proxy voting is a approach you can engage with companies, but I am thinking it's more dialogue. You have to engage. You have to have plans how management are thinking about net zero, but also carbon reduction targets, how they are seeing this risk, all that, how they manage it. In my opinion, at the moment, still, company leaders are seeing, not an opportunity in net zero. They are seeing that as some, challenge and risk to their own model today. But I do think they have to change the linear to a more circular model, as we say, and that means we have to be very close. We need plans from management to judge, and then we have to track in our conversation with them. And I do think David, Mark said in a good point, the top polluters in the world. We have to look again, how can we create more impact also as an asset manager? We can go to all, or we can concentrate some clusters. How can we really, create the impact of our, make clients money? But by the way, Mark also brought a great point. Our clients want that too, more and more, by the way. So it's very important. And I think, Afsaneh said activism can be a small asset manager, they can do, but we have to go broad-based engagement, and also for the big polluters, big, let me say, company that have to change, we have to engage there. And I think proxy voting is one thing, is for me, more company dialogue on a regular basis, and be there also in AGM. I think in Europe, go to AGMs talking about what we want. That is powerful. And then end of the day, if that's not reaction, more and more we have to also show up in divestments that we said you are not anymore a part of our universe. This is very strong with it.
So you had mentioned conversation and dialogues by means of general annual meetings in Europe. Afsaneh, I'm wondering if you can kind of explain to us the regional differences we're seeing. In a year where so many investors are so much looking forward to COP26, there had been a prevailing narrative until this point that European investors took a much harder line and stronger stance when it came to ESG investing. What are some of the things that we can learn from some of these conversations that we're seeing on the ground that can translate across regions?
Sonali, at Rock Creek, we had a climate summit just over 2 months ago. And in fact, we had some of the UN champions there, Nigel Topping and others. And it's been really interesting because a lot of the words that were special words used by people like us or people, in finance or people in the energy business are now becoming more common words. So and that is happening across the globe. When the first IPCC report came out, I remember I was at the World Bank working on the energy side, and it really was read by technical people. Today, the IPCC report, that came out a month or so ago is read in Asia, in Europe, in the US. So there's just a better understanding. Now, while that understanding of these concepts is becoming more global, and whether you're living in China with very polluted air, or in other parts of Asia or India with all kinds of other kinds of pollution, or in the US and in Latin America or Europe, you're living different worlds. But no question that in Europe, in terms of, we talked about action earlier, but if you look at the power sector, there's still coal use in Europe, but it has been reduced gradually faster than in some other parts of the world. If you look at, in general, reducing energy use and increasing efficiency, Europe has been ahead. Don't forget, energy prices were always higher in Europe than they were in the US. So by definition, whether you're a household, whether you're a company manufacturing something, you're going to be more energy efficient, right, than in the US, where energy prices have been cheaper. So part of it was governments, taxing energy. Part of it was other kinds of human behavior encouraged. But no question, Europe was ahead. In the US, what I've found at Rock Creek again is that our investors, like endowments and foundations, and high net worth, and were the early stages of being in this dialogue. Whereas today, what you see is everyone, whether it's a big sovereign fund, whether it's a big pension plan, or a small foundation, everyone is talking about how can they increase their allocation to energy. And that's really across the globe, in Asia, in Europe, and America. So how can we, again, use what we've learned in Europe and bring it to the US? I think that will be the big way to leverage.
Mm-hmm. Mark, maybe you can speak to some of these regional differences and maybe set the tone for what regional conversations you would like to see happen at COP26.
Yeah, look, I think the big thing to call out is just the difference between investing in developed economies and developing economies, because the developing economies are going to need to build a huge amount of infrastructure as they try and boost their economies. So they're going to need a huge amount of financing to do that. And the financing probably today, most of it exists in the developed markets. So what we've actually got to do is link up the developed markets who want to invest to get good returns with the need of the developing economy. So that's why at COP26, we've called for the creation of an international platform for climate for finance. And that's a body that can oversee a global transition plan and sit in between developed markets and developing markets to try and marry the two demand and supply needs up. Because if we don't get the developing markets to, when they build all of the energy infrastructure they need, if they don't do that sustainably, we're not going to hit Paris as a globe. So I think that's the biggest thing to call out.
Asoka, maybe you can speak to some of the differences across borders and maybe some of the changes that you may need to see across borders in order to make investing in greener products more sustainable across the world.
I think there are, Sonali, I think very clearly, I think there are differences. We can see also in the client demand, not only, and also due to, I think Afsaneh mentioned that, I think behavior of companies in Europe is different because the energy price is a really, let me say, important factor. And so they have to be more efficient. But again, also the standards are different. And that is why we are coming. I think net zero is a global challenge now for everyone. And I think if everyone signed for that, I think that the global challenge is of this generation. And by the way, one only small comment, Sonali, I think the COVID, in my opinion, has accelerated the thinking on sustainability. But coming back for me is important that we have to also, a financial industry and also asset management have to keep pushing. There's no time to rest. And for me, asset managers should actively engage with regulators, in my opinion, important associations that creating standards, policymakers set boundaries and defined standard and norms. This is super. That's also part of engagement, what asset managers have to do. We are missing that. By the way, also global standards to measure the climate effect. It's super important if we have a global standard, and again, can be a dream, but it would be very helpful to compare and overcome all the regional differences.
So I'm really glad you brought up regulation as well, because, it's been well telegraphed in the news that DWS has been refuting some allegations about greenwashing at the firm. A recent Bloomberg intelligence report also says that this case in particular exposes potential weaknesses in European rules that are supposed to be there to combat greenwashing as well. The CEO of Deutsche Bank, Christian Selling, recently had said at a conference that the bank and the asset managers need to do a better job at explaining their role in society to combat this climate change issue that we're seeing across the world. I'm wondering, when it comes to regulation in particular, very specifically, what kinds of standards would help asset managers do their jobs better? And I say this with a caveat also that here in the US, the SEC is defining their own rules at the moment. So I do think that this is the time to create the rules that asset managers need to see.
Sonali, I can only welcome that. This is what we are asking. And I think, again, please forgive me, while we are never comment on questions relating to regulatory matters, we firmly really reject unfounded allegations being made, against DWS. 2019 and 2020, we made ESG the cornerstone of our corporate strategy, and as we expected ESG to become a license to operate for asset manager in the industry. So I do think I'm very welcome standards, but again, even we can't expect immediately have a global standard that every area, and I think we have a cultural differences. And I think one of the Afsane was an eye-opener, in my opinion, the energy prices. They have a different, historical backgrounds that people might have to, accept different regulatory standards. I think SFDR, Sonali, I think that is the 9th of March this year. I think the world changed. Every company more or less defined what is ESG in the past, and still. But since SFDR regulations kick in, in Europe how ESG now in some way defined the Article 8 and 9 funds. And we are expecting next year by European Commission to come European taxonomy. There's still a political fight for some sectors that are clean energy or not clean energy. But also next year, we will see a MiFID sustainability type regulations kicking in. All that is coming up, is growing. That is after 5 years being an absolute, let me say, a main topic of the industry, or become, for me, license to operate. This is a journey. Also, regulatory standard will be a journey, in my opinion. And we can only welcome from from DWS perspective. I think the asset manager would welcome. I think, Mark, it would be. I think also the whole financial industry will welcome. It is something what I'm missing. That is why we have to engage not with only the investee companies, but also with associations, regulators, policymakers. It's important.
Moving over to the U.S. regulatory side, Afsane, I'm wondering if you can kind of speak to your expectations. I had mentioned the SEC earlier, and there's a lot on Gary Gensler's plate. That is for certain. However, there is a big push by investors to see clearer rules around disclosure for ESG matters for companies. What is your view on this matter? And is there anything else that you think should be on his agenda?
I think it is really a good thing that Gary Gensler and the SEC are looking at the subject broadly of ESG. And I think at the same time, what will be very important as they started talking to the investor community and others for comments, most importantly, you need to have practical definitions and practical rules. Because right now, I was doing shadow pricing studies. I won't tell you how many years ago, but they can be very subjective. On climate, again, it's probably the most straightforward area that the SEC can provide its regulation. On the other ESG factors, much harder often, where it's on things like education or health or social issues, much harder to provide that kind of regulatory framework and definitions. But no question that what you said earlier, Sonali, which is if US has its own standards and if Europeans have different regulation and the Asians have different regulation and each country has its own regulation, without some sort of envelope, commonality between all, we will miss a big opportunity. So while we're going into COP26, I think the US SEC and the other regulators should really take the occasion to work across the globe to come up with some common standards on regulation when it comes to climate and ESG.
Mark, how are you engaging with policymakers at the moment on productive changes to rules that can start to make the changes that everybody in the investing community has talked about for as long as I've covered this industry, honestly?
So a couple of different ways, directly with policymakers, the banks, regulators. Our focus there is absolutely on the disclosure and trying to have consistency. I think you've heard it now from both that if you don't have consistency globally, we're going to be really, really hard for us to construct portfolios to meet net zero. I think the other areas we're liaising is through investment associations. So that's where we're calling for all companies to have net zero plans and transition plans to get to net zero, not just an ambition to be net zero, a transition plan, how they're going to actually get there. But I think ultimately the thing we are going to need governments to do is to set a proper price for carbon. And that has to be coordinated globally so that the corporates actually pay for the carbon they're creating. And that can be used to then clean up the carbon. But better than that, it will actually mean that the incentive of corporates to make profit will be aligned to reducing carbon in the corporate. So just like Canada has done that, right? So we need that globally.
To be clear, when you say price for carbon, you mean a stricter carbon tax.
Absolutely. Globally coordinated, consistent globally. So Canada is a great example of how to do that, I think.
Right. The other question, and Asoka, because in the context of some of the larger challenges DWS has been grappling with lately, I do want each of you to answer a question about how you protect yourself against greenwashing. I think the idea of greenwashing is something that scares a lot of investors lately. So perhaps you can share some of the things that you are putting in as safeguard.
Yeah, I think, look, we have to say, and I always said in all my previous conversations, this is a journey. Sustainable investment is a journey, and I do think Afsaneh and also Mark, nicely explained. This is not my interpretation. This is a really, if you people, the sustainability topic is very deep, and you have to understand all the standards, or the existing, all the rules, and if you have to go deep dive into the portfolios, we talk today so many things, Sonali, about engagement, about to be in associations, building engagement with regulators, and so on. But also with all these standards, self-defined standards, so different. So everyone have to understand if someone say something like that. But I have to say, the only thing what you can do in this situation like us, be transparent, very transparent, to market to our clients and to our shareholders, and to say this is a journey. That's the way we are doing. It's hard to tackle, but you have to tackle. This is the situation. I'm honest, and I'm saying that in this way, and we will not deter from our strategy, and will continue the path. I do think if we now all shy and say, I'm not taking any risk and not doing anything in this area, this would be a very harmful for the world.
Afsana, as more investors enter the ESG sphere, is the idea of greenwashing more prominent to you in any way? And how do you protect yourself and investors from people who might be entering the industry but not doing the same work? As we see, it's a lot of work that some of the other folks who have been in this industry for a long time doing.
I think, Sonali, one of my colleagues at Rock Creek, Ken Lay, was the person who, when he was treasurer of the World Bank, did the first green bond. And that was a few years ago. The issue of greenwashing has really come up since we had the first green bond. And in fact, last week, you had Walmart and Verizon do some of the biggest issues of green bonds. And investors are going into the bonds. But one of the things that the World Bank has done in more recent years is really trying to make sure you don't just issue the bond, but you make sure everything that is, that bond is financing has some minimum standards around it. I think if we use that as a, common way versus some of the horror stories we've heard, all of us, where, green bonds were used to finance coal projects, let's say, or other things that were directly environmentally detrimental, I think we'll be ahead. Again, it goes back to having those simple rules. If you issue a green bond, or you have an equity fund or ETF or active fund or private investments, real assets or private equity, where you're investing directly in positive ways to invest, I think that's the easiest way. If you're investing in carbon capture, we invest in water, in climate-related, in climate-smart areas, those are all positive ways to actually reduce carbon capture, right? Reduce carbon emission. The harder part is when you tackle the old economy, right? And what kind of impact are you having on the old economy? And then the last part is, I think, where you get into that greenwashing part. You can frankly try to avoid that. Some of us will have to deal with it. We are choosing not to. But if you're concentrating on positive ways, I think that's the easiest way. Come up with projects and investments that directly reduce carbon in everything you do. And that, there's so much to do right now.
It's interesting that you bring up this idea of the terms themselves within the green bonds and the financings across different products that are coming out. Just last week, we had found that and this is according to a Bloomberg analysis, over 70 sustainability-linked revolving credit lines and term loans arranged in the U.S., right, the regional differences, since 2018, shows that more than a quarter of those have provisions that don't necessarily incentivize greener behavior. Many have no penalty for falling short of stated goals. Mark, when you look at the terms that are out there in the market today, what do you need to see differently of the banks, of the asset managers that are providing financing for these companies?
So we are a private financier ourselves, and we have created a lending program which has external accreditation to be sustainable. And the way that works is we have specific measures from our borrowers that they have to reduce the carbon emissions, for example, of their property portfolio. It's often property lending over certain timeframes. If they do, we actually often give them a better rate of borrowing as a benefit of it. So actually, it's the other way around. We try and turn it so that if you deliver, you then get the benefit. If you don't deliver, well, you don't get the benefit. So that's something that we're doing, sustainable lending across European real estate.
So Afsana also mentioned a great point, examples of where you can direct your money to incentivize better environmental behaviors. I'm wondering if each of you, starting with Afsana, can walk us through your most exciting green investments over the last year or so.
We have in recent time, in the last 12 months, done a couple of investments One is in a company called Generate that really is creating one of the best platforms to invest in renewable energy across all the different areas. The other one is a company called Appeal, and that's a small private company where they have produced a product that goes over fruit and vegetables and creates longer shelf life for these investments. For these food. And what that means is that you need less refrigeration in order to get your food to market. Two, poor farmers, particularly in lower income countries, can actually get their food to European markets, let's say, or American markets and prosper. And at the same time, you're reducing wastage. So those are some examples of what we have done. And, we have created also a big database of possible investments, whether it is in water, whether it is in climate smart investments that we can make, but also other of our investors who are interested can make, because I think the list is expanding right in front of us.
Asoka, can you speak to some of maybe the investment that you're most proud of most recently and most innovative in this space?
So only one thing, it's a great question. And it's you are really mindful to ask that. I think I will not name a company, but I do think it's the most important, powerful one. And I really love this example to go into the supply chain of a leading company and make with them or for them impact investing. This is great. You can see that these companies want to change and you can help them to really do impact investing. This is powerful. I think, by the way, the same time as I started with engagement, this engagement is also really a great, you have a great moment sometimes. You will feel, wow, management is taking really serious, want to change. And and we can help them. And that is also important. That's not activism, we would say, but that is in some way a great experience too. But I do think this supply chain, impacting working with the really global companies on their value chain or supply chain, and then be in the impact investing, that can be a great part, what we can bring to the table too.
I think Afsaneh and Ashoka have given us really great examples of how you can use capital to create change. Mark, what are some examples of investments you have made or are looking forward to making to do the same?
So in the last 12 months, we've lent 600 million now in the sustainable lending program I mentioned. So that's reducing the carbon footprint of property. We're extensive investors in renewable energy across the UK and Europe. So offshore wind farms, probably one of the most recent transactions we've done there. But I think one of the most interesting is we've just agreed an investment program in forestry, because if we can have a nature-based solution, then actually you can create a true offset to carbon in the world, which is hard to do. And certainly to claim proper credit for it, it needs to be afforestation, and that's the route we've taken. But that's the one I'll call out as probably the most significant.
And we only have a few more minutes here, but Mark, maybe you can give us a note. Afsaneh mentioned earlier there's a generational change going on here. I spoke recently to an entrepreneur. He's building a company, raising a lot of capital, struggling with where to put his retirement money and where to direct his own staff. How does that issue play out among your own clients?
Yeah, so Aviva is the largest corporate pension provider in the UK. So what we're providing for them is actually net zero aligned pension schemes in their entirety. Now, a lot of pension schemes haven't signed up to this sort of solutions yet, but this is actually having all the components you have in your portfolio, all of them to be net zero aligned. But in terms of answering your specific question, where to put money, then I think tomorrow's fantastic investments are going to be in the corporate space, new technologies for energy transmission, so hydrogen related, battery storage, And of course, we've heard it already, carbon reduction, like carbon capture and storage. So I think those are the most exciting to look for. They're not really available in enough size that we can invest for the whole portfolio yet, but it's coming.
Asoka, do you find a similar push from your clients?
I think, to be honest, for me, is one of the most important things are the traditional economy to bring into really the Greece industrialization. That has the biggest effect. And now more than ever, is for me, really, we have to pushing really ahead, towards net zero and bring the whole, in my opinion, society and again, industry and I think also policymakers into this direction. And this, if we get there, we have reached a really important, thing by the way, behalf of our clients, because they want that. And I think, Sonali, it's not super interesting, this statement, but it is, if that all works and we are pushing hard forward, this can be a very powerful.
Afsana, I'll leave you with the last word here. Give our audience a sense of hope on what kind of net zero investments and future that they can look forward to.
I think we've been very realistic in this discussion, thanks to you, Sonali. At the same time, I'm actually more excited than ever, having worked on clean energy for many, many years. I feel it's something which is now becoming a public discussion. And that is the best thing. Once you have the youth, as you talked about, engaged, once we have investors who are powerful, engaged, and once we have, practical investments that people can actually, like you said, that young entrepreneur can actually find something specific to invest in, I think we're in a very good place. And I'm very excited that today, in Canada and at the Conférence de Montréal, we're having this discussion as we're going into COP26, because we really need to make sure that the policymakers move to really not just making policy, but making policy that we can actually use immediately and call the action that we can implement.
I thank all of you so much for your time and look forward to following everybody's progress and seeing where the rest of the year goes. Thank you so much.